All right, let's bring in Tom White right away, host of A Fast Market and senior options contributor, help set up the action today. So the shutdown continues. There's not going to be any votes today, to the markets. Does it still not matter?
I think it matters a little bit. We've seen a little bit of chop so far this week, Diane, but still positive for the S&P 500 and NASDAQ 100. They're positive on the week. The Dow a little bit weaker. Same with small caps. So I think they're taking it in stride at this point as this gets extended. It doesn't seem like after 7 votes that they've made any headway in either direction. They're still 5 votes away in the Senate as far as, passing this. But it doesn't seem like anybody's digging out of their holes. They're going to stay, in that realm where they're not going to vote to get this passed to open the government, which is maybe causing a little bit of the additional volatility that we've seen so far this week. But if you take a look at some of the other asset classes, those are still picking up. We're seeing a rebound in gold today. Bitcoin's rebounding a little bit also. So we're still seeing flows. I think one of the key things is there's so much liquidity out there. There's so much money that's looking for some type of risk on or investment thesis here. And I think that's going to continue. And then if we do get a resolution to the shutdown, over the next week, over the next couple of weeks, does that open the floodgates for everything's okay now? We can go back to this risk-on mentality. But then again, starting next week in full force, we get this kickoff to earnings season, which is going to maybe confirm or deny maybe a lot of the optimistic expectations for corporations moving into the historically strong fourth quarter. So, yeah, a lot to kind of decipher here. We're going to get a consumer sentiment data number today. Those have been falling a little bit, and those numbers don't seem to matter to the risk-on mentality that we're seeing in the equity markets.
That's a good point about, with a dearth of data coming from the government due to the shutdown, maybe that could matter potentially more today. It's one of the kind of soft pieces of data. And once upon a time, that used to be a leading indicator. It's been less so in recent years in kind of a post-pandemic world that we're in now, and I look at Kalshi now, the prediction markets on predicting how long the government shutdown will last. The odds are increasing that it will get closer to a month, now more than 25 days. I know you follow this closely. And then there's also the matter of, there will be some missing paychecks today. So does that then put the pressure on lawmakers to come to some kind of resolution? How is there going to be more focus on consumer sentiment today and other data that we get next week, like the beginning of next week, like the National Federation of Independent Business, Small Business Sentiment? Does that matter more?
I don't think so, because the consumer sentiment data has been really choppy lately. It's just because maybe it's bipartisan. It's a really small survey that, that they have. We saw the final report from a couple weeks ago that, kind of fell to 4-month lows. So I think that's less reflective. The Fed says they look at consumer confidence, consumer sentiment data. If that's deteriorating, that just gives maybe the Fed more ammunition for those potential rate cuts that the market's already priced in, 2 more into the end of the year. I think if you look at it that way, now the BLS might be coming back to work, right? So maybe we get that CPI data next Wednesday, that all-important CPI data. But there's a bunch of other areas where the Fed's looking into as far as trying to extract data. I mean, they were looking at the Chicago Fed National Activity Index and some others to kind of get some indication on what's going on without a lot of the data that they need. But it feels like that, that quarter basis point rate cut's already priced in for the end of October. So do we need the data? I don't know, because, we didn't get that non-farm payrolls last Friday, and it didn't seem to negatively impact markets because they look past it, because they know it's probably going to be poor numbers at this point, and we've seen a deterioration in the jobs market.
So speaking of, obviously, all eyes are on the Fed, and it's not just about rate cuts. It's about who's going to be the leadership from here. And so, essentially, we're now at the big 5 with, seeing this CNBC report that the list has been narrowed down by Treasury Secretary Scott Bessent as the leader of, kind of these interviews. On the list, a few of the names not surprised by, actually the majority of the names I'm not surprised by. What's your take on the names? We've got Bowman on the list. We've got Waller on the list. We've got Rick Reeder on the list, who we'd heard recently that his name had been floated. I've talked to him before as well, and he seems to be honored that he's on this list as well. What's your take on this and the setup now for the Fed?
Yeah, Rick Reeder, he might be the dark horse here because it seems like if you didn't have any experience on the Fed board, that you weren't going to get into this final whittled down list of 5 candidates at this point. They said he impressed Bessent during the interview process, and I think one of the key things that I noticed out of this is whoever is elected might not become might not necessarily become the Fed chair immediately, right? You get the vice chair of supervision in Michelle Bowman. I think a lot of the rhetoric that she's talking about kind of sets up nicely with what the administration wants at this point. But, having Secretary Bessent in charge of this process makes you maybe the market's a little bit more confident on who they're going to pick for this position. Kevin Hassett, maybe on the outside, kind of going down the list here. Kevin Warsh. Also maybe on the outside a little bit, but you have to start looking at, Bowman maybe as a leader, Waller as a leader in this race. At the dark horse, Rick Reeder at this point. But, they might not finish these interviews because they're going to do more, and we might not get a pick until after Thanksgiving due to the fact that, hey, Bessent still has to whittle this down to even more, to probably 3 people, and then give that to the president for the final decision.
Yeah, it's interesting. I was at the Loeb Awards last night, and it's awards that honors the best in business news. And before the election, Matt Peterson was one of the Barron's had written about that was the early predictions of Bessent, kind of setting up and looking for a potential new Fed chair. So the rumblings have been out there for a while, and now we actually have some names on the short list. Again, as you mentioned, Rick Reeder coming up as the dark horse, especially given that the list right now, as it stands, are those who are either currently members of the Fed or have been, so they have technically experience in the House there. By the House, I mean obviously the Fed. Let's talk a little bit about a mover that we've been watching this week. Nvidia hit another record yesterday. Yeah. Earlier when I checked on it, it was still a little bit higher in the pre-market. What's your take here? And there's still potentially a headwind based on this Financial Times reporting about China and their import controls there.
Yeah, they're trying to stop the flow of these Nvidia chips mainly. It's other companies also at this point. They're going to be more strict with their checks at the major ports. But think about this, Diane, and I think it's a head scratcher because I think a lot of this stuff is coming out ahead of the talks that we're having with China over the next couple of weeks here into the end of the month. And they're setting up to kind of twist the needle in our side ahead of those talks. And the chip restrictions, think about this. A lot of the chips that are going into China that, suddenly appear there, we don't know how many there are. They're going through Singapore companies, some shell companies in Singapore. So they're still getting into the country, but having more stricter controls. It's almost a tit for tat going into these negotiations. They've also put more restrictions on the rare earth metals recently, and then there was a report today that they're investigating Qualcomm, as far as one of their acquisitions there in auto talks. So probably a little bit of political negotiation ahead of these tariff talks. But you know what? I think if you take a look at the commentary that Jensen Huang's stated this week, that they're still in rapid demand for their chips. And without that benefit of China sales at this point, he keeps on talking about we've got to open up China to getting these chips. But then the Chinese government's kind of pushing back saying, hey, we don't want any government entities, any private companies to have these chips. They're kind of wrangling about, the implications of that. But Nvidia rising to all-time highs without even the benefit of sales over in China is pretty significant. But if they do get something opened up during these negotiations where they're saying, hey, we'll give you more rare earth metals, you know what? we'll give you these Chinese the chips to China. So that is, I think, a part of the negotiation that's going on between the two countries, as opposed to maybe putting stricter restrictions on those imports at the ports.
All right, great stuff there. Thank you, Tom. That is Tom White, co-host of Fast Market and senior options contributor. Appreciate the deep dive there on Nvidia, and also catching people up on the latest as it stands with regard to the potential new Fed chair.